Raising the Federal Reserve rate may be compared as a brake pedal on the economy. To be honest, it drives up the cost of many products, particularly those that are purchased with credit, but it also affects things that are credit bought later on. For example, you will have less money available for other expenses if your monthly budget is mostly devoted to your mortgage or car payment. Thus, everything is impacted, including items that were not bought with credit. The fact that the Federal Reserve is making decisions too slowly and using relatively outdated data worries me about their decision-making process. I believe that the Federal Reserve will go slowly in reducing interest rates just as they did in raising them. Now it appears that this is the case. Prior to hitting the 2% goal, you indicated that you would be open to lowering interest rates. Do you think there will be a decline in the rate of inflation? To some extent, I am certain about it. Over the previous few years, there has been a declining tendency. Whether we have enough confidence to say that it is heading sustainably towards 2% is the question. Not quite ready to say that, though. Get ready for what's coming next from Tesla if you thought everything we've seen thus far was amazing. We're here to explain everything to you as we get ready for what is sure to be an incredible second phase of Tesla's adventure. There are many exciting things in store, such unanticipated stock price peaks and groundbreaking discoveries that have the potential to completely transform the electric car market. We'll analyze the most recent financial projections, explore Tesla's next significant actions, and talk about how they might impact the market and your investing approach in this episode. We'll also be watching Elon Musk and the Tesla Group to see how they intend to handle the chances and difficulties that lie ahead in the upcoming months. Are you eager to learn more about Tesla's Phase 2 plans? Are you curious in the potential effects on transportation in the future? Then, so that we can begin, click those like and subscribe buttons. Greetings from Tesla Stock News. Hello everyone. Today I'm going to share some exciting news that may cause a stir for both Tesla and those who follow interest rate movements. Federal Reserve Chairman Jerome Powell reported to Congress on July 9 and 10 of last year. This is significant because the markets are highly susceptible to his words. The idea that he would lower rates in September is intriguing. Without a question, Joe Biden's policies have had an impact on the economy, and Jay Powell is working to find a solution. The ordinary American has lost over $28,000 in purchasing power over the past 3.5 years. Rate reductions would be beneficial, but they might come across as political if they occur in September as opposed to July. Jay Powell and I had a talk yesterday. He believes that inflation is declining, which raises the possibility of rate reduction. In short, there will be much talk about the political implications of rate cuts that occur in September rather than July. This is something that everyone following interest rates or owning Tesla stocks should know. The Federal Reserve may lower interest rates in September, which would affect savings and loans as well as the performance of businesses like Tesla. Production is reportedly slowing down at Tesla, which is causing problems. This isn't just a small hitch. It indicates that they can't give the same reduced interest rates that they occasionally do. They may have to tighten things up in the upcoming quarter as they rush to resume increasing output. There might be some turbulence in Tesla's financial flow for observers. And there's inflation, which is a constant worry. This is also a problem with Tesla. The typical consumer may not find items more inexpensive even if the Fed lowers interest rates to make borrowing less expensive. It's a mixed bag, with the Producer Price Index, PPI, predicted to rise. Although it's questionable, some experts believe this would slightly increase Tesla's stock price. Tesla released their most recent profits on July 23rd, and the excitement is palpable. This is not your average earnings announcement. The stock market is about to have a wild ride. Although Tesla's stock appears to be stable, a storm is developing that has the potential to rouse this dormant monster. We anticipate more than simply adjustments with the next earnings announcement. We anticipate pyrotechnics. The financial community is on the tip of its seat as the expectation grows. What's causing all of this enthusiasm? There are a lot of rumors going around that Tesla plans to hire the former CEO of Uber. This isn't simply any addition. Rather, it's a calculated move that may provide Tesla a stronger competitive advantage in the mobility sector by bringing significant expertise in developing tech-driven transportation solutions. Everyone is excited about what could be. Could this indicate that Tesla's business strategy is changing? Are they planning to expand into the ride-sharing market or maybe speed up their initiative to develop driverless vehicles? Investors, social media users, and forum moderators are all having conversations about these concerns. There's a level of excitement and mystery to the supposition as the results called draws near, awaiting official word with great anticipation. Investors and Tesla devotees want to see whether these reports hold true and what it would imply for the company's future. If verified, this may be the turning point that launches Tesla's stock into a vibrant new era of development and invention. It's not simply rumors that are causing a stir. Ever the showman, Elon Musk is increasing the anticipation with remarks about results and a possible robotaxi event. The atmosphere is electrifying, akin to the stillness before a storm, and everyone is anticipating great things. Given that Tesla's estimated profits per share are $2.50 and its price-to-earnings ratio is 102.24, some people are questioning if the company is truly worth this much. Among Tesla's financial measures, the P/E ratio, price-to-earnings growth, is one that jumps out. Tesla's P/E ratio is at an amazing 3.16. That is over twice the usual P/E ratio for the majority of industrial businesses. To put things in context, this is a significant indication from the market, not simply a figure. It demonstrates that investors are confident rather than merely optimistic. They think Tesla will soar, not simply increase in size. Why is this relevant? Investors may evaluate a stock's valuation while taking the company's pace of earnings growth into account by using the P/E ratio. Tesla's consistent innovation and boundary pushing in the electric car and energy industries are responsible for this predicted exponential development. Tesla is always changing, whether it's through new model releases, market growth, or breakthroughs in battery technology. The market's confidence stems from a wager that Tesla will keep driving innovation and redefining its sectors. Nonetheless, Tesla may see an intriguing dynamic as a result of such high market expectations. On the one hand, it establishes a high standard and encourages further advancements. However, it also puts pressure on Tesla to achieve these lofty goals in order to maintain investor trust. This high P/E ratio is a signpost for everyone owning Tesla stock or thinking about buying, signaling both the possibility of large returns and the inherent hazards associated with lofty expectations. Regarding the price of Tesla's shares, some analysts believe we may witness peak euphoria. A peak euphoric price of $371 per share has been projected by experts using the P/E ratio and growth rate. Although this is seen as a reach for the time being, it may be possible in the long run. However, based on strong fundamental research and market performance, Tesla's stock may soon reach a sweet spot price range of $189 to $275. Tesla's stock now has downside support around $231, which indicates that it hasn't dropped below this mark in the last several years. This assistance prevents a precipitous drop by serving as a safety net. More intriguingly, the stock is near a make-or-break level of $258, which is a key moment. Price resistance over this level may indicate a positive trend and lead to a move up to $295. That concludes our in-depth analysis of Tesla's stock dynamics. People, we have examined a wide range of topics, including the probable peaks of Tesla's peak euphoric price and the crucial support levels that may indicate significant stock market movements. We've examined the P/E ratio and the insights it provides on investor confidence in Tesla's potential for fast development. So, what are your thoughts? Does Tesla's aggressive growth pace portend big things to come, or are they raising the bar too high? In the upcoming months, how do you envision the stock performing? Will it achieve such lofty goals or encounter opposition? We'd love to hear your opinions and forecasts about Tesla's future in the comments section below. Remember to press the like button and subscribe to Tesla Stock News if you like this video and would like to receive updates on anything related to Tesla stock. Follow along for additional updates and thoughts. We appreciate your time, and we'll see you in the upcoming video.